Welcome back. The stock on our radar is NIIT Limited. Despite this weakness that we're seeing in the broader markets, NIIT Limited share price stands tall. In the last two trading sessions, yesterday and today, the stock has seen a rise of close to about 36-37%, and it's risen on very large volumes. Just to give a little bit of a background, now NIIT Limited demerged. So now there are two companies under that group. One is NIIT Limited, which basically focuses on B2C. That's skills to career business. If you want to upskill yourself, then those revenues flow into NIIT Limited. But there is another company called NIIT Learning Solutions. And that is also listed on the exchanges, and that caters to B2B. If a corporate wants to train all their employees, then they will, sign a contract with NIIT Limited. So the company that we're now focusing on is the B2C business, which caters to the skills and career business of individual employees. To talk more about the way forward, we're joined by Mr. Rajendra Singh Pawar, the chairman and co-founder of the NIIT Group. Mr. Pawar, thank you very much for joining in. In the month when you reported your Q1 numbers, you had guided for about a 5 to 8% top line growth. You're saying that there is sequential improvement in the numbers, orders are flowing in, and you also spoke about EBITDA break-even in Q2 and an overall positive EBITDA margin for the full year. Are you on track? How is demand?
So, first of all, thank you so much. Nice to be here. And to answer your question, I think when we're talking of NIIT Limited, so we are seeing the same picture. And you have to remember, we are now in more or less in the silent period. So short-term comments I can't make, but we are on track to get that growth and to be a bit positive for the year. And as you know, NIIT is going through a transformation. We have a big transformation agenda, which we're working on.
Okay. I think the basis of this interview is also to understand how demand trends are doing, considering that Q1 was weak because of a temporary freeze that we saw in hiring in the IT sector. How is the situation on the ground as of now? Have you seen a considerable pickup?
So, see, the fact is that the IT sector has been challenged in terms of hiring. Overall, the sector has been challenged in terms of hiring. And there isn't a very big picture showing that we're going to hire in large numbers in terms of gross numbers. So that is a challenge for the Indian training market. However, I think we've been, as I mentioned just a minute ago, that post the demerger, we demerged for a purpose, and post the demerger, there's a whole new plan for NIIT Limited, because NLSL, which is NIIT Learning Systems Limited, has a very clear track and a clear trajectory. That's the Fortune 1000 companies, that is learning outsourcing, very underpenetrated market, going at 20% growth, 20% margin. That's our prediction, and that's very safe. NIIT Limited, which deals with the skills and career business, and therefore let's say the B2C business, is much more affected by the environment at a point in time. So we don't see a very big uptake in new jobs in the near term, but we see the need for changing skills. And so our own strategy for growth is predicated basically on three main things we are doing. One is, from a governance point of view, I think we mentioned this before, we have made a new board, we added very good board members. The most recent addition is the person who had Fractal, which is India's first AI unicorn. So building that capability, building technology capability, building market capability. So from a governance point of view, we are strengthening the capacity of the company to rechart its business, and that is NIIT Limited. The second is that we are looking for the horizon for new sectors which are emerging in this country, because as you know, 42 years ago when we started, we were looking at the IT sector coming on the horizon, and we built talent for that sector. 2006, we looked at the banking sector, and we started building talent for that. That's a large part of our business. Right now, I think India is poised for growth on a number of dimensions. So we are looking at newer sectors where we will be making offerings. And that's the work in progress at this point in time. So that's the second vector of growth. The third, I think, is around the whole delivery model. So in COVID time, there was an exceptional uptake of online learning, which corrected significantly post-COVID, and we saw that happen in the marketplace. And we just believe that since we've been dealing with technology from day one, we started multimedia training in 1991. I think we should be in a position to build the right blend of online and physical, and so we are putting that to work. And finally, I think the most interesting part is the role of AI going forward. I think we see these as the 4 vectors of growth which are determining how we go forward to grow NIIT.
Talking about growth, sir, you've set out an ambitious target. You want to achieve revenues of 1,200 crore rupees by FY27, FY28, which compares with the 340 crore revenue that you had last year. We're looking at a 3.5 times jump in your top line. Can you tell us how you've arrived at this number of 1,200 crores, and when you achieve it, what would be the steady state margins for the company?
So I think on volume growth, which is the point that you made, it is coming from the fact that IT will grow. We don't expect that to remain challenged as it is in the near term, but that's already at a good base. It'll grow, and it'll grow not as much because many new people are getting added, but reskilling has become very important. That's one. Second is we are looking at diversification to look at new emerging areas where talent is required. And those ideas are now beginning to be put into action. So you look at new fields, like you look at the whole new manufacturing area. You look at design as an area. That's not new, but I think everybody is looking at those areas. You look at engineering R&D as an area. You look at supply chain. So on the horizon are many areas where India will be seeking talent in large scale. And we, as we have done in the past, we want to be in those spaces. So that will be the diversification which will make a big difference. I think as we go forward, we're factoring that into our growth. And
sure. I just wanted to jump in here because due to paucity of time, perhaps, since you have over 700 crores of cash on your books, wanted to understand how that would be deployed over the next 1 to 2 years, considering that you're looking at several growth areas for the business.
So, see, we've kept some stuff quite obviously for M&A because this is a very good time for M&A, as you can see. In the last 3 downsides we've seen in our life, those were the times when we actually could do good acquisitions. And this time, of course, we have a much better capital reserve sitting with us to be able to put in. So M&A will be one part of it. But as I mentioned, there are newer areas which are also going to take capital. And so a combination of investing in M&A and driving organic growth. Both these factors will be where we'll be using the capital as we go forward.
Mr. Pawar, you spoke about that how you're diversifying, that India will start seeking talent in other areas like manufacturing, supply chain, etc., design, ER&D. According to you, what percentage of your revenues could potentially come from these new areas, say in the next 5 years?
We expect that in 5 years' time frame, maybe between 1/3 and half will come from these areas.
Okay, and the balance would be IT and banks, which has traditionally been your forte?
The IT area will grow, the complexion will change. You know, what we were doing in the past, what we're doing now. So there'll be much more of how we train using things like AI, and there'll also be what we train on, because the subjects are changing dramatically. So IT content, methodology will change, but that will remain quite significant. The banking is now going into insurance, into all kind of financial services. We've got a reasonably good growth, and I think that will continue to grow. So these 2 sectors will have reasonable growth. But I think the bigger growth will obviously come from the net new areas, which are some of the areas that I talked about.
Okay, all right. All the best with that. Thanks a lot for joining in. That's NIIT. Big move coming into the stock, up almost about 15%, talking about the growth in their business and the way forward for the company. Let's now cut across to my colleague Parikshit.